The current structural integrity of the EURUSD pair on the H1 timeframe remains firmly bearish, following a series of downward shifts in market structure. Please watch the full video for a comprehensive breakdown of our institutional approach to this price action. Examining the chart, the market exhibits clear bearish dominance, characterized by successive breaks of structure to the downside after rejecting liquidity pools near the 1.1780 and 1.1710 levels. Price is presently contained within a critical range, hovering between the immediate supply zone of 1.1630 to 1.1655 and the immediate demand zone situated at 1.1585 to 1.1570. Our primary focus is concentrated on this entry zone. We are currently waiting for mitigation at the 1.1630 to 1.1650 supply region. Once price action provides institutional confirmation, we expect the downward momentum to resume. Our invalidation level is strictly set at 1.1670. Should price action breach this threshold, our current bearish bias will be rendered invalid, necessitating a reassessment of the prevailing market conditions. Regarding our objectives, we have identified 3 specific levels to clear liquidity. In our primary scenario, we anticipate a progression toward our objectives, designated as T1 at 1.1580, T2 at 1.1550, and T3 at 1.1510. These levels represent our core interest for capturing remaining liquidity within the active demand zone. While a bullish shift is theoretically possible, it requires a definitive structural break and close above 1.1655 to nullify existing supply constraints. Until such a shift occurs, maintaining a bearish orientation remains the most statistically probable approach, given the strength of the previous downward impulses. This is an educational video, not investment advice. Discipline and systematic execution remain the hallmarks of professional trading. We encourage you to observe how these liquidity zones interact with institutional volume in the coming sessions. Follow for more. The next analysis is coming very soon.